Kia ora, and welcome to the CoreLogic Property Market Update for Whiringa Arangi, November 2023. We're officially calling it now. The downturn is over. Though it's important to recognise this is not the case everywhere. The CoreLogic House Price Index showed nationwide property values increased by 0.4% over October, with most of our main centres following suit. Tauranga was the one main centre to buck the trend, with values falling by a slender 0.1%. But at the other end of the scale were Ōtautahi, Christchurch, up 1.1%, and Kirikiriroa, Hamilton, up 1.3%. Indeed, Ōtautahi Christchurch values are up a total of 1.5% over the past 3 months. The upward turn has been evident across many of the other main urban areas too, though it's not all one-way traffic, and would still provide caution that performance may be inconsistent both month to month and region to region. As things stand though, Rotorua property values increased by 2.8% over the month, Porirua values were up by 2.3%, and Tairāwhiti, Gisborne, Whangarei and Heretaunga, Hastings all experienced about 1% growth. Meanwhile, values in Whanganui, Kapiti Coast, Ngā Motu, New Plymouth and Waihopai and Invercargill decreased by 1% or more. Though in Waihopai and Invercargill's case, values are still up by 0.5% over the past 3 months. Perhaps the perfect example of the potential volatility which could feature over the next 6 months especially. Part of the expectation for inconsistency is due to the time of the year. Market activity typically slows down as we approach the summer holidays, which isn't too far away now. Add to that the protracted election outcome and ensuing coalition discussions, and any market participant who is hoping for greater clarity may well wait until the new year before re-engaging. At a high level, we can see this with the continued restraint in the flow of properties being listed for sale each week. Yes, the spring lift has occurred as per usual, but the volumes remain below previous years. Supply then, as measured by the total number of properties on the market, is starting to increase as sales volumes remain patchy, the high cost of credit alongside persistent uncertainty keeping a lid on demand growth. More choice for those that are out there buying should lead to less desperation with offers and muted growth, at least until we all return from holidays and get stuck into our plans for 2024. This could play into the hands of first home buyers, who may be more inclined to continue the search over summer while other buyers are on holiday. They've already been doing relatively well, as our first home buyer report showed, picking up 27% of sales in Q3. They're drawing on all the assistance possible, such as KiwiSaver and the low deposit lending allowances at the banks, to help combat the challenges of high prices combined with high interest rates, and they remain willing to adjust their expectations to get into the market, something which is a bit harder or less appealing for other owner-occupiers and investors considering purchasing right now. Once we get some policy certainty, it's likely some investors will re-enter the market. Improved tax treatment of properties via a shortening of the bright line test and eventual reinstatement of interest cost deductibility is unlikely to be a game changer though, given relatively low yield, muted capital growth expectations and the probable introduction of debt to income restrictions in 2024. Affordability for everyone then remains inextricably linked to interest rates. And for that reason, a lot of focus will go on the Reserve Bank Monetary Policy Committee's final meeting of the year at the end of November. It seems almost certain the official cash rate will remain on hold at 5.5% as the bank continues to assess the impact of a strong and long tightening cycle. It's worth reflecting on the fact that the OCR was only 0.25% a little over 2 years ago. For now, the adjustment for mortgage holders continues to be well managed, as mortgage arrears are under control. It continues to be a watching brief though, as unemployment is now inching upwards and previous OCR increases are still being worked through our fixed mortgage base. To ensure you never miss a beat when it comes to all things property, follow our news updates on the CoreLogic NZ social channels, including LinkedIn, Instagram, X or Facebook, download our latest monthly chart pack and subscribe to the New Zealand Property Market Podcast on all good podcast players. Mā te wā.